It looks like we've got a bunch of questions here. I'm going to try to take them in order, and we'll do our best to get through them. Uh, the the first question actually that I received, I wanted to send to you, Richard, and that was, so what's the incentive for the agencies to put out numbers that are going to be proven, false so quickly? What's their motivation? What's their incentive for doing that? You talked about the EIA earlier, so maybe you could touch base on that, Richard.
Yeah, that's it's always hard to try to understand the motives of other people. Unless there are documents that you can uncover, you have to sort of use some mind reading. And with the EIA, I think everybody wants a happy story with regard to the future of fossil fuels. The government wants to believe that we're going to have more industry, local governments. Everybody wants that, and so what the EIA does, I think, is basically take data and analysis from the industry more or less without criticism. I mean, the report that we did, the study that we did was, it was just one guy, yeah, albeit a very knowledgeable and intelligent guy, but it was just one guy, and it's not like we have millions of dollars to do this study with. But I see no evidence that the EIA has done comparable analytic work with regard to shales. Why not? Your guess is as good as mine. It looks to me like they really don't want to know. They would prefer the happy story.
Let me just add one.
Could I?
Oh yeah, go ahead, Deborah.
Yeah. Well, Richard's right that EIA takes a lot of their data directly from industry, but one of the things that I've always found interesting is that EIA actually goes in and does a retrospective analysis of their own work, their own projections. And if you go in and look at that, what's kind of funny is that you'll find that EIA admits that their projections for the price of natural gas are wrong about 78% of the time. Their projections for the price of crude are wrong, I think it's about 76% of the time. Their projections for the price of crude and GDP are wrong, I believe it's 94% of the time. So EIA really doesn't have a very good forecasting record.
Yeah, the one thing I wanted to just add was, we recently, Postcarbon Institute and physician scientists and engineers for healthy energy just put out a report on the Monteray, and the Monteray in 2011 was highly touted as having just a huge amount of recoverable tight oil in the Monteray formation.
2/3 of the total reserves of tight oil for the U.S.
So 15.4 billion barrels, and that was done by a consulting group for the EIA called Intech. And after our report was released, he was interviewed on TV and basically said, "Look, these were just forecasts. Once the real data is out, then we'll be able to reassess." And the EIA's defense was saying, "We never said that all of this would be produced. This is just what's quote unquote technically recoverable." And I think that we've had conversations with them. I think they generally get puzzled when people run off with their numbers and make political hay out of them, but that's what happens, So I think that they feel like we're just saying what's technically possible. We're not saying what's going to happen, but you can bet politicians and industry run to the bank with those numbers, So there's a responsibility there. Here's another question. Since the viability of fracked wells is so poor, won't the industry give up on fracking in short order as it negatively impacts profits? Maybe the free market will work to our advantage in this case. I don't know if you guys have anything to add to that, but it seems a bit more of a statement than a question.
Well, I think they are losing money. There's no doubt about it. I mean, you can see it in their balance sheets right now. But as I stated, if exportation goes forward and they can export enough of the stuff, then that changes the economics quite considerably, because now suddenly you've got a $9 profit built in, roughly, let's say $7 to $9 profit. And then these very expensive unconventional wells make a lot more economic sense. So exportation is going to, or has the potential to greatly change this picture for industry as far as the profitability.
In terms of tight oil, much of the industry is giving up. I mean, Deborah, you mentioned how Shell and the other majors have basically been taking write-offs and pulling out. Most of this shale phenomenon has always been about the smaller companies willing to take on a lot of risk. Chesapeake is the biggest one, and then they range in size on down. There are dozens of these smaller companies that are basically doing all the heavy lifting, and as you said, most of them are at this point losing money on production and staying in existence by selling off leases to whoever's foolish enough to buy them. So I don't see the industry in terms of these smaller companies just packing up and going away anytime soon, because basically this is what they do. This is their business model. They don't have anything else to do. Now, through mergers and acquisitions and bankruptcies, it's probably going to downsize over the course of the next few years. But the majors are getting out, but the smaller companies don't have any place to go.
One of the things I forgot to mention, because I didn't realize, well, I just forgot that I cut that slide for this presentation in terms of time, was that the monies have dropped off quite considerably, the investor dollars. M&A activity in the first half of 2013 dropped off 52%, and private equity money year over year from middle of, or half year of 2012 to middle of the year 2013 dropped off 92%. So you're starting to see these companies, there were some announcements the other day that Devon was selling off assets in order to raise more cash. Range Resources has been doing some kind of creative, trying to do some creative events to raise monies. But I think that's going to be something to keep our eye on going forward, because without the money, this is a very capital-intensive exercise, and if the private equity guys aren't willing to pony up anymore, and the M&A fees drop off, and the investment banks aren't making a lot of money anymore, then it's going to be harder and harder for them to drill. So that'll just be something that we need to kind of keep an eye on going forward.
So there are a couple questions here about how to get this analysis into the mainstream media, and maybe Deborah, you could talk about your experience dealing with the mainstream media, and then maybe we can go to another question. I'm jumping ahead, just around how to make these arguments more effectively to policymakers as well. So I'll open that to both of you.
Okay, thank you. Believe it or not, the mainstream media is beginning to figure this out, and they are beginning to write about it. I mean, when I first started in 2009, I sent information, well-documented information across the board to all the mainstream financial press, and they wouldn't touch it with a barge pole. Now, that all changed in January of 2012, and we have been gaining momentum ever since then. And I'm seeing a fairly significant number of stories now coming out of Bloomberg. Bloomberg's done a really good job. The Times, the Financial Times in London, The Guardian, Sankei in Tokyo. So it's starting to be written about around the world in the mainstream media. Certainly the Wall Street Journal hasn't covered it, but they have been such shale apologists from day one that, in fact, I think it's rather interesting. they have been kind of backtracking a little bit in their blogs recently over the past 3 or 4 months, because more and more information is coming out that's casting doubt on shales, and the journal really has put themselves out on a limb talking about that this was going to be the energy panacea and the great savior, energy savior. So I think that that's interesting in and of itself, when you see somebody or some entity like the journal feeling the need to try and backtrack a little bit off their former statements. So I'm rambling a little bit, I didn't mean to, but I think we are seeing a lot of good stuff happening in the mainstream media, and the thing is, just keep feeding them well-documented information, and the truth comes out in the end.
Richard, anything to add?
Yeah, well, the data at this point is pretty strong. The financial data, the geological data, and I think it just needs to be introduced into local conversations as well as the national conversation. There are hundreds of anti-fracking groups all across the country that are at work in specific areas with specific issues, and from Colorado to Texas to Pennsylvania, and I think activists can use this data and these arguments with local officials, bring this information to their attention. Not many local folks or even state folks have the time or inclination to read all of these articles and all of the data, but we can summarize it for them, provide the footnotes, and it's all there.
The one thing I guess I would want to add to that is that there are a few obstacles here. One is the complexity of this information. Journalists, politicians, very few of them have degrees in geology or really can understand the intricacies of the finances. The other is, I think, a tendency to look for good news and want good news, want to report good news. And the other is, I think, to dismiss people that they see as having an agenda, even though obviously the industry has an agenda. When groups like ours come to the media, they immediately look to try to figure out how to discredit us. I think The Economist recently called Post-Carbon Institute a greenish think tank. So we need more voices. We have, Deborah has done an incredible amount of work, Richard, David Hughes, Art Berman, who Richard mentioned earlier. We need more people, making these arguments, so it's harder for them to dismiss us. And then using things like Voster's quotes and statements that are coming directly from industry to help, Let's talk about politicians a little bit, because, are there any things that you have found in your experience or suggestions either of you have in terms of how to engage local politicians or national politicians in this question? Again, being sensitive to the fact that, they don't want to be delivering bad news to their constituents, right? So how do we handle that? Deborah?
Okay, it's interesting. I meet a lot with state, local, and federal politicians, and it's fascinating to me, because you walk in there and you think you're going to talk to them about health impacts, and they really don't care. And the reason they don't care is because it doesn't impact their bottom line as a politician monetarily. What does impact their bottom line are things like road damages. And so I found it quite fascinating that as I go in and I have these meetings and I sit down and I start showing them these numbers of, well, you only thought your severance tax revenue was good, because have a look at your road damages, and that really does get their attention. So clearly more work needs to be done on externalities. We're trying to raise some monies right now at Energy Policy Forum to do a report strictly on externalities, because I think that's certainly been my experience, that politicians, it's like their eyes are glazing over until you mention you know, the road damage costs, because that does impact their budgets. And then they definitely sit up and start asking all sorts of questions. So that's one avenue, I think, to follow.